Adil bringing you a review of the Aussie USD for Tuesday's trading, the 22nd of July 2014. Okay, so we have Mr. RBA Governor Stevens about to strike, according to this article. Okay, so basically it's a wild card, what he has to say. He's been attempting to jawbone the Aussie in his last few speeches, so obviously, I can't see him being reluctant to do it again. Okay, so basically, whenever a policy maker speaks, it's always a wild card. It's classed as an exogenous variable event, something that's beyond the control of a trader. The only thing that we can do is we can attempt to preempt the move based on what our interpretation of inter-market analysis, which I'll shortly do, and give you my insight of how I trade on a day-to-day basis. Okay, or alternatively we can react. Okay, so we can either preempt if we're good enough via intermarket analysis, or we can react. Okay, so generally speaking, the best option is to react. Obviously, if you are skilled enough to read between the lines, then you can certainly preempt the move, because your intermarket analysis will certainly give you a lot of signals, a lot of leading indicators that will guide you in the and give you the exact direction of which the Aussie will attempt to move. Okay, so basically it's all hinges on whether or not he's dovish or hawkish with regards to his comments. Okay, if he states that the Aussie is too high, then obviously that will send it down. And again, like I said, it's a wild card, so it could be it's also not only just his comments, it's just the way in which his comments are interpreted as well. Okay, so let's have a look at our intermarket analysis and variables, and see exactly where we are and where we're heading. Okay, so from a daily chart of the Aussie USD, the US dollar, as you can see here, this is an inverted head and shoulders formation. We are into gap fill resistance. We put in a doji on Friday, even with geopolitics. So what are the other overwhelming or overriding concerns with regards to the Aussie? Okay, so with regards to the Aussie right now at present, obviously it's the dollar equation. So the dollar side of the equation, obviously we've had talk of tapering, talk of higher inflation. We've got an inflation number tomorrow, so that could help the dollar move and obviously trigger off the inverted head and shoulders formation, given the fact that that's the most vital ingredient with regards to the US dollar. And obviously geopolitics as well. So geopolitics are obviously hurting the Aussie USD and the Kiwi dollar as well, as you can see it being down. Not only that, okay, we also have the concerns regarding the Kiwi dollar. Okay, so the Kiwi dollar with regards to the inflation reading and employment reading, etc. So the economic data out of New Zealand hasn't supported a rate hike. So if it isn't supporting a rate hike, then obviously that's going to send the Kiwi dollar down and move it south, because if you can't justify a rate hike, whether it's inflation, whether it's GDP, whether it's growth, etc., etc. Okay, and there have been some comments regarding the higher Kiwi. So if the Kiwi moves south, then obviously that forces the Aussie to move south, because they both move in tandem. Okay, so bear that in mind. So geopolitics, higher inflation out of the US tomorrow, because obviously the US dollar side of the equation, and obviously the Aussie side of the equation, everything hinges on Mr. Governor, or should I call him the Governor, Mr. Stevens. Okay, tonight. So that's basically what it all hinges on. Now, the other factor as well is that China was flat last night. Even though we have geopolitical concerns, China was flat, so that's generally a bullish sign for the Aussie. So that's something that you must certainly bear in mind. If obviously the Shanghai moves higher today, then that helps the Aussie. Also, given the fact that Chinese growth forecasts were raised to 7.5% as opposed to 7.4%, and the economy certainly seems to be stabilizing. So all these factors in play, and they are other factors as well. Okay, so first of all, US dollar is into gap fill resistance. So bear that in mind. So what does that mean? That means that the news out tomorrow with regards to inflation readings is going to be weak. Therefore, will send the dollar down. Therefore, obviously, will cause the Aussie to rally. Okay, and that's obviously in tandem with risk. So if we get a ceasefire, if Gaza obviously comes to a ceasefire, Palestine, Israel comes to some sort of agreement, obviously that's bullish for the Aussie, because the dollar will weaken. If we get some sort of Ukrainian and Russian peace treaty, again that's bullish for the Aussie. So that's another factor as well. So if geopolitics de-escalates, then that again is bullish for the Aussie. So bear that in mind as well. Okay, So there's a lot of variables at play, so you have to control the dollar side of the equation and the Aussie side of the equation. So the UGP, as you can see, inverted head and shoulders formation, but we have slammed into the 200 MA, and we are finding resistance at this 200 MA, so that means a weaker dollar, a pullback on the dollar. Obviously that'll cause the Aussie to move higher. The only way, like I said, the dollar can go higher is if inflation readings higher than expected and the geopolitical situation continues to escalate and no signs of a pullback or a truce. Okay, because Mr. Kerry is actually has headed towards the Middle East region. So again, bear that in mind. Okay, so let's have a look at the Aussie USD now, and let's see if we can find the exactly what's happening there. Okay, so daily chart clearly shows you H&S formation. Okay, we have had a bullish engulfing candle on the 18th of July, so that's going to dictate. We have held the upper 50%. So again, that's something that you must bear in mind. Okay, obviously if Mr. Governor, Mr. Stevens, talks the Aussie down, then obviously that triggers that's a catalyst for the H&S to be triggered. Add in the fact that Shanghai is lower overnight, again catalyst triggered. Add in the fact that the geopolitical situation still remains out of control. Obviously those three factors alone will trigger the Aussie lower, and add in the fact that you have higher inflation reading tomorrow, higher CPI reading tomorrow. Again, that will trigger the actual Aussie USD to go lower. Obviously risk off in the markets, etc., etc. Okay. Now the 4 hour is a concern for me because we have put in a double bottom and we are holding this support level. Now you also have, although you do have a H&S, you also have an inverted head and shoulders, so bear that in mind. So we have to be open to all. So you've got a double bottom, and now we are into this side of the equation. So we've got a double bottom there for the head. Okay, and then we are holding the 61%. As soon as 61%, or should I say 75% goes, then obviously we are looking for a failed inverted head and shoulders formation, and obviously the market short has a failed long squeeze, and then we move south. Okay, so again, you know the reasons why that will happen. Okay, so keep an eye on geopolitics. Okay, so 60-minute chart, very similar. Okay, very similar. We are back in, we've got an inverted head and shoulders formation. As you can see, we've put in a double bottom there around the 0.9335 level. Again, like I said, if that breaks, then or we go back to retest it, then we should certainly move lower. Okay, and that's basically all I can see for now. Okay, from my perspective, a 10-minute chart, you are putting a bullish engulfing candle, and basically you are stabilizing here, and we'll see exactly what happens with regards to the speech. Okay, and that will dictate direction. Now the daily chart, like I said, H&S, but that H&S is dependent upon this lower time frames of IHS. Generally speaking, on the technical analysis, you always follow the larger time frames because they obviously take precedent. But at times like this, when you have multiple time frames and they are conflicting, then we always look at our alternative pair. So the Aussie USD is observed, then we can look at the Aussie JPY. So let's have a look at the Aussie JPY. So what do I notice there straight away? We've got a double bottom and we've got a potential inverted head and shoulders formation. So that's bullish. So that's giving me a bullish signal on the 10-minute chart. 60-minute chart, this is again inverted head and shoulders formation. So it's telling me it wants to go higher. That's basically what it's trying to tell me, is that yen pairs or the yen is certainly being sold off. Risk on is coming back on into the marketplace, and that's going to send the Aussie USD higher. Okay, and if it can go higher versus the yen, it can go higher versus the dollar, and it can also go higher versus the Swiss franc. So again, that's a bullish sign. Okay. 4-hour chart, let's just observe this again. We've seem to have put in a reversal here, again inverted head and shoulders on the 4-hour as well. On the daily chart, okay, daily chart again, we almost negated the red candle, so again keep an eye on that, and we'll see exactly what transpires with regards to that. But overall, smaller time frame certainly signaling bullishness, certainly wants to move higher. If the Japanese yen can move higher overnight and the Shanghai can move higher overnight, then yes indeed the Aussie USD will short squeeze and move higher. So if the Aussie JPY is bullish based on Shanghai higher, Nikkei higher, risk off, de-escalation, etc., etc., then even if Mr. Governor Stevens tries to talk the Aussie down, the Aussie certainly will move higher. Okay, so there's not just one variable affecting this, is multiple. Again, we can observe this versus the Aussie CHF. So again, Aussie CHF, 10-minute chart, we seem to be, well, nothing really, lower lows, lower highs for now. Let's just say innocent until proven guilty. 60-minute chart at the moment still remains relatively weak, lower lows, lower highs, so nothing really there from that perspective. A 4-hour chart, see if we can see any signs there again. Nothing really. Okay, nothing really, to be honest with you. I mean, you can use this trend line here. I suppose we are into support, but again, and the 4 hour remains bullish, high highs and high lows. Daily chart at the moment is not really signaling anything really. It's not made it a higher high, so it's certainly not a bullish signal from this perspective. If anything, obviously we seem to be certainly moving higher at the moment, but from my perspective at the moment, nothing really that we can deduce from here. I'd rather say neutral on this. Therefore, Aussie JPY will be the one to dictate. Now, we can also look at the Aussie CAD. That's generally a good formula. So again, you can see no lower lows being created. 10-minute is bullish. 60-minute chart, again holding the 200 MA, holding the support level, so bullish. 4 hour chart, again inverted head and shoulders formation, so bullish. And then daily chart, we seem to have negated the bear flag, bull flag formation at the moment, so again bullish. Okay, an inverted head and shoulders pattern, and we have a bull flag scenario playing out. So what that's trying to tell me is that the Asian market wants to go higher, Nikkei wants to go higher, risk on is now going to be embraced, and the markets will certainly reverse in the opposite direction, especially given the fact that you have the US markets. If you observe the US markets, certainly shrugged off the weakness and certainly moved and pushed higher. Now the other factor as well that you have to take into this side of the equation is that the 60-minute chart on the FTSE 100 has an inverted head and shoulders. Given the fact that the Aussie and the FTSE are interwoven and intertwined, that is relatively bullish. Okay, so bear that in mind. That's a bullish signal. Given the fact that you've got an inverted head and shoulders formation here, this is a bullish signal. That means that the Aussie is certainly going to reverse and move higher as well. Whether that be due to de-escalation in the geopolitical crisis, whether that means a lower CPI reading, which means less chance of Fed tapering, which means bullish because the QE is going to sustain itself, which will cause the Aussie to move higher, etc, etc, etc. Whether it means Mr. Governor Stevens will remain neutral, so on and so forth. That's irrelevant for now because we can certainly class that as potential noise, but we're trying to read between the lines by observing all our multiple variables. Okay, so that's just the way in which I trade based on intermarket analysis. Hope that's been a good insight, and overall my bias right now will be bullish on the Aussie. Again, like I said, that is obviously that things can change very quickly with regards to Mr. Governor Stevens. As always, we have good money management, good risk management. We put our stop losses in place and we attempt our best at doing our research and our analysis. If we're wrong, stop loss is there to protect us. Okay folks, risk on, risk off, wax on, wax off. Goodbye now.